Hello, everyone. Welcome to our first live session for the month of June. I'm so excited to be here this morning. So let's see what we have here. Happy New Month to you, everyone. Let's confirm we are good to go. If you can see my screen, you can hear my voice clearly. Please type in hi in the comment section and let's get this started. I would like to see some comment, please. If you can see my screen, you can hear my voice without distortion. Let me know in the comment section by typing hi, and let's get this whole thing started. Okay, let's see what we have. All right, Nova, good morning to you, Nova. Thank you very much. Ekovlado, all right, I see you. 532, Vanessa, okay. All right, okay, all right, thank you very much. Hey, Valerie, how are you doing this morning? Blessings, one love, you all, much success. Okay, I see your comment, Morph G. Thank you very much. Happy new month to you. Hey Carrie, how are you doing this morning? Glad to have you around. Happy new month to you too. Okay, next 57. All right, so I will take this as a confirmation that we are good to go this morning. And it's on this note I welcome you all to yet another promising session. And in this session, we will be diving into the fascinating world of analyzing the financial market using technical parameters such as chart patterns and to identify trading opportunities ahead of the New York session today. So get ready. So we are going to be making informed trading decisions, checking historical price movement, simply price action. So let's see how things works out today. And for those who are joining us for the first time, you are highly welcome on board. I'm so glad to have newcomers around. And what we simply do here is to come together in anticipation of the New York session, managing our existing trades. We have a handful of financial instruments that we have been monitoring since the beginning of the week. So we are going to be looking into how well these instruments have been doing so far and how we intend to manage our existing trades and also look out for trading opportunities ahead of the New York session. And this comes up every day, 10 a.m. UTC, 11 a.m. West African time. This is where we come here. So try as much as possible to be part of every session, and trust me, with time you will get to understand how this works and you will be able to use the information you have gathered during our session here to make your independent and individual decision on your portfolio. So welcome guys once again, and on this note, let's dive right into the business for today. And you know how we do it. The first thing we are going to be doing this morning is to check the economic calendar. Of course, we want to see what the majority in the market are looking forward to. We want to look out for high impact events that will be affecting the currency pairs that we are monitoring. And you know how important these events are, as it helps us to position ourselves ahead of the event, during the event, and after the event. It also helps us in better timing ourselves in such a way that we try to identify market structures, patterns that we are going to be using to take advantage of any trading opportunity during the event. And so this is why we are going to be looking at this, and I was able to pull out a handful of a couple of macroeconomic events, of course, coming in from the US docket alone, and that we are going to be looking at in a moment. And one thing you will have noticed in the market in the last 24 hours is that we have been seeing some level of cautious trading where majority have been pulling away from the dollar in the last 24 hours, and this is connected to the awaiting the positive resolution to the US debt ceiling drama, which is still ongoing. And during the later part of yesterday, we were looking forward to key votes, the outcome of the key vote in the House of Congress, which I think I read an headline this morning that it came out positive as they passed the bill. So we are looking at some positive signals in that regard, which might likely be inciting some bullish traction across the US dollar, and it appears we're beginning to see something like that during the early hours of today. So we are going to be looking at how we are going to be positioning ourselves and see how to understand the market's reaction to this event. So let's look at the economic calendar. So we have the ADP employment change, which is coming up in an hour from now, and this is a data released by the Automatic Data Processing Incorporation, and it gives us the measure of the change in the number of employed people in the US. So a rise in the indicator has a positive implication for consumer spending. So we want to see a higher reading to give us a positive signal for the dollar, while a lower reading will be giving us a negative signal for the dollar. And from what we have on the data, we have from the previous data here, we have a 296,000 as against this consensus projection of 170,000. So this is a sign that there is a little bit of contraction in the economy. So we are going to be looking forward to what the actual data is going to be in an hour from now. Is it going to be beyond expectation, just as expected, or even below expectation? So these are what we are going to be looking forward to, and we want to look at the chart to see how participants in the market will be anticipating this event. Then secondly, we have the ISM manufacturing PMI, which is coming up in about 3 hours from now. So we are also going to be looking forward to that. So this is an index released by the Institute for Supply Management in the US. So it gives us an insight into the business conditions in the US manufacturing sector. It is a significant indicator of the overall economic condition in the US, and anything above 50 is seen as a positive signal for the dollar. But from the previous data we have here, we have a 47.1, which is not something positive actually, and we have a consensus projection of 47 today, which is a little bit on the lower side too as well, and it's a sign that we have some level of contraction in the market. So we are going to be looking forward to what the actual data is on that one too, and also see how the market is going to be anticipating this event. And don't let us forget that tomorrow, Friday, June 2nd, we are going to be looking forward to the almighty non-farm payroll data, which everyone in the market obviously is looking forward to. And that will also have an effect on how participants in the market will be playing their cards during this New York session today. So let's dive right into the chart from this point, and let's see what is really going on the chart from a technical standpoint, and then use whatever information we are able to gather to identify a potential trading opportunity. And as usual, the first commodity we are going to be looking at this morning is, of course, the US oil spot. And on the US oil spot, we have been quite profitable this week on the US oil spot. And if you had been with us since Monday on this commodity, you will see that we have been selling the US oil spots after price action broke down the $73 area. And since then, price action has moved a whooping over 600 pips in our favor. And don't forget that we had multiple entries captured on this one as we continue to add more positions at the breakdown of key structures in this market. As you can see here, we had structures like the $72.30 level. We have the $71.80 area. We also had the $71 level here. We also had another one here yesterday when we analyzed this market after identifying a flat channel between the $69.80 level and the $69 area, giving us a flat channel to work with. And we also took advantage of that opportunity there as well, which also gave us about roughly 200 pips on the first position, and if you had missed out on that one, the market presented another chance again, though that move didn't last long like the previous one we saw here. How price action moved about 140 pips before this old choppy situation we are witnessing in this market is happening right now. So congrats to everyone who has been part of this profitable journey. Well done to you guys for being on standby to catch these opportunities we had this week. So right now we are going into the New York session today. What is going to be our plans? How do we intend to position ourselves ahead of the New York session today? Well, I was able to identify a simple setup on this chart this morning after monitoring how price action has been playing out in the last 24 hours, I think. And one of the key factors that we are going to be using today is this bearish trend line that you can see on your screen right now. So for the sake of clarity, let me highlight it out. So after connecting the series of lower highs in this market, you will see that we have a bearish trend line figured out. And since Tuesday's trading session, New York session on Tuesday, we have seen how this trend line had continued to reject every bullish attempt in this market, hereby giving us a sign that sellers are still strong at this juncture in the market. However, something interesting happened here during the first couple of hours in the New York session yesterday, when we saw price action drop into the $67.50 area. We saw the first touch of this level here, and then we saw the second touch during the early hours of today around this area. But one thing we can take out of this is that the inability of price action to break below the previous low is a sign that buyers are gradually gaining momentum. Well, despite these lower highs we saw here, you will see that we are yet to find a lower low to emphasize or give a statement that bearish momentum is still very possible from this current structure. So I'm of the opinion that we might likely be seeing a reversal pattern from this area, but mind you, we are not ignoring the potentials that sellers could still take over this market. So we are going to be weighing both options to see how to position ourselves ahead of the New York session today. So we are going to first of all talk about the potentials that the buyers have from this current structure. So now when we look at things from an holistic point of view and considering the impulsive move, bearish move that brought us to this point in the market, you will see our price dropped into the $67.50 area. We saw price come back into the $69 area. Then we saw how price was unable to break the previous low, hereby giving us a situation where there is a chance that price action could transition into a reversal pattern in the form of a double bottom structure. And you know how we do it. Whenever we start spotting the potential that price action could transition into a reversal pattern, the next thing we want to do is to project a neckline for this reversal pattern, which definitely is going to be a platform that will guide us to validate the potency of this structure. So what we did here, you can see we had a neckline which coincidentally shares a confluence with that support line of the flat channel we identified during our live session yesterday, which falls at the $69 level. And with a neckline around the $69 area, we are going to wait for price action to break out, retest the structure to confirm that we have a reversal pattern on our books. So this is what we are going to be looking out for to buy the US oil spot for today. So we want to see price action break out to the $69 level, and if you look closely at this level, you will see how it shares a confluence with that bearish trend line we identified earlier. So if we have price action breakout of this bearish trend line, then this will be a sign that the trend line may no longer have the capacity to negate the bullish momentum anymore, hereby negating it and confirming that we have a counter trend opportunity on our books. So with this situation here, we are going to be looking forward to a breakout retest of structure, and if you are a cautious trader, you might want to wait for a retest to confirm the validity of the buyers around this area before joining that move to the upside. And we also have another structure at the $69.80 level, which happens to be the resistant line of the flat channel we identified during our live session yesterday. And if a breakout retest of that level also happens, it will be welcoming more opportunities to add more position to our existing trade. And we still have structures like the $71 area here, which was a significant demand zone in the past, as you can see. And if price breaks above that area as well, we want to be looking out for more opportunities to add more position to our existing trade. But there is a caveat to this whole setup that we are talking about here. That is, if price action ever breaks out of the $69 area and we start seeing buy opportunity, one thing for sure here is that we must acknowledge that this is a counter trend opportunity, and you know how we do it. Whenever we have counter trend opportunities, we want to ensure that we are always around to monitor price action. As price action moves significantly in our favor, we move our stop loss accordingly to secure and rather position all the way up, because anything could still happen here. This is a very strong bearish momentum, and even if we join the bullish buyers here at the breakout of the 69, we want to ensure that we move our stop losses accordingly, as these levels I made mention earlier could still serve as a strong selling niche in this market. So whatever happens around that area is going to be determining if we are going to be adding more buy position or getting ready to sell. So that is what we are going to be looking at on this chart to look out for buying opportunity on the USO spot. So we are looking for anything above the $69 area. Now, in as much as we're looking out for buying opportunity here, we cannot ignore the potentials of the sellers at this particular point in time. And considering the fact that price action has been bearish since the beginning of the week, let's look at what to look out for here that will give us an insight into a trend continuation to the downside. Well, one of the structures I was able to identify here is this trend line. After connecting the series of higher lows, of course, price action has been finding higher lows since the New York session yesterday. We have the first one here, we have the second one here, and currently price action is oscillating around this area in the last couple of hours. And in fact, the last hour candle here closed in the form of a hammer candle, which from a technical standpoint is a strong signal that buyers are still present around this area. So we need to be very, very careful here, as we are at a critical point in the market where anything could actually happen. So for us to sell the US oil spot today, we want to see a breach of this bullish trend line. That is, price action breaks down the trend line to the downside, giving us a bearish signal. And if we do have a breakdown of the structure, remember, we are not getting too excited at this point. We are neither having a sell stop order yet, because we want to see a significant confirmation that will help us to validate that selling pressure is gradually gaining momentum. So we want to scale down into our lower time frame, like the 10, 5 or 15 minutes time frame, to look out for retest of structure. It could be the retest of the bullish trend line, or in fact the retest of this bearish trend line we identified earlier. You will see what a confluence we have there, and that area is going to be a major determinant of price action if it does comes back to retest that level. So we want to see price action retest it, and continued selling pressure around that area will further confirm that sellers are still strong in the market. Then we could join the bearish momentum to the downside. So this is how we are going to be selling the US oil spot today. And one thing we also want to take note of here is this demand zone at the $67.50 area. Let me show you quickly here. So we have the $67.50 area. We want to take note of that demand zone while we are selling. So whenever price action gets into that zone, we want to move all our stop losses to secure the current sell position and wait out to see how price action reacts to the zone to determine if we are going to be adding more sell position or getting ready to buy the US oil spot again. So if we start seeing buy pressure around the $67.50 zone, we look out for opportunities to buy, and if we see a breakdown of the $67.50 level, we then look out for opportunities to sell. So this is basically what we are going to be doing on the US oil spot today. So we have a simple setup here where the $69 area serving as a neckline of this potential reversal pattern will be welcoming buy opportunity if it so happens that price action breaks out of that level. But if it happens that we have a breach of this trend line here, then I've told you that we want to scale down into our lower time frame to look out for confirmation that will support a trend continuation to the downside. So please, let's take note of this. Mark this out on your chart, and if possible, you might want to screenshot my screen so that you can use it as a reference point when you're about to make your independent decision. So if you have any questions regarding what I just explained so far, or you need me to shed more light in an aspect or a particular structure here, feel free to let me know in the comment section, and trust me, I'm willing to be of help in that regard. So that is that on the US oil spot, and I will be moving on to the next option, which is the USTech100. So I will continue to check the comment section to see if there are any questions for me. Okay, so on the USTech100, we have been selling the USTech100 since the beginning of the week, though we haven't really seen a significant bearish momentum at this particular point in time, as things are still looking a little bit more bullish based on the current structure we have here. And remember, at the beginning of the week, we had a flat channel where price action was initially ranging between the $14,415 level and the $14,350 area. And you know how we do it whenever we have this kind of simple setup. We want to wait patiently, waiting for structures to mature in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in fact, during the first day of the week, we had the privilege of being part of a buy position when price action broke out of that resistance line at that point. And in fact, price action moved about how many pips was that? Moved about 100 pips, 120 pips before we begin to see sell pressure resume. And during our live session on Monday too as well, we acknowledged the 14,470 level, where we said we are going to be looking forward to another opportunity. And in fact, price moved about 60 pips in that direction. And of course, you know that we normally move our stop losses accordingly when price action moves in our favor to secure the position. And if you had done that correctly, you would have been taken out with a small profit, or probably a worst case scenario at break even. So this was the situation we had during the first couple of days of this week. However, during our live session yesterday, we acknowledged the fact that we are in a bearish momentum, in a bearish trade rather, and we saw this bearish trend line as our yardstick to guide our trading activity going forward. So after connecting the series of lower highs here, we had this beautiful trend line mapped out on this chart, and we agreed here yesterday that as long as price action remain below the bearish trend line, we shall continue to look out for structures that will support a trend continuation to the downside. And if it so happens that we have a breakout of that trend line, then our bearish momentum will be negated, hereby giving us a platform to look out for buying opportunities. And in the last 24 hours, price action has actually been trading below that trend line. But one interesting thing happened here, and sorry for those who still have a sell position running at this current structure, especially those who had sold at the breakdown retest of the 14,350 and the 14,300 yesterday. I would be advising you to move all stop losses to the entry point around that 14,300, as it appears that things might likely change anytime soon. And why have I said this? Well, if you look at this current structure, let me zoom this out a little bit so that you can see things more clearly at this point. Now, if you look at what has been happening here since yesterday's New York session, you will see that though we're still within the bearish trend line, one fact here is that as soon as price action got into this 14,235 level, we begin to see buy pressure come in from that area, hereby negating all attempt by the sellers to go to find lower lows. And for me at this point, this might be a clear signal that buyers are gradually gaining some momentum. And if you look at the nature of these candles here, look at what happened during the later part of the New York session yesterday. All the 4 candles there are giving us a sharp rejection of that zone. And if we look at what happened during the early hours of today too as well, we can see sharp rejections of that area. For me, this is a clear sign that buyers are gradually gaining some momentum here. And today, I would want to be projecting a bullish expectation in this market as long as price action remains above this 14,235 area, which I will be calling our new demand zone at this point. So for the sake of clarity and for those who would like to screenshot my screen, let us highlight this area as our new demand platform for trading opportunities going forward. So we shall be labeling this one a demand zone. So we have a demand zone here situated at around that 14,230 area. So let's call it $14,230 zone. Okay. And then let's place this right inside the box. Let's make it a little bit bigger than what it is and place it right inside the box, and we give it a white color. And then let's make it darker a little bit. All right, so we now have a new demand zone at this point at the 14,230, which is going to be a temporary one in the meantime, unless we start seeing an engulfing candle springing out of this current structure. Now, I also identified a key level at the 14,275, which is right here, which has also been a major determinant of price action since the early hours of today. So I want to see price action break out of that structure, do a couple of retests if possible, for me to start thinking of buying at this point. And coupled with the new demand zone we have here, we might likely be seeing a significant move to the upside, and we also definitely want to be part of that move as well. And while we also look out for more opportunities if price action breaks out key structures like the 14,300 and the 14,350, as you can see here, to add more position to our existing trade. Now, to further emphasize the potentials of the buyers in this current market structure, I would like us to scale up a little bit into the 4 hours time frame, where you will be able to see what we identified at the beginning of the week, and look at what we have here on the 4 hours time frame. It is quite obvious that price action has been bullish since the beginning of this month, and to further buttress that, we have an ascending channel to manifest this. However, when we zoom into what happened last week's trading session, we saw the breakout of that resistant line of that ascending channel to further emphasize the level of buying pressure in this market, and price action went to as far as hitting the highest point for this year at the 14,530 before we begin to see this old choppy situation, bringing us into something that looks more like a retracement phase in this market. And personally, things are looking very bullish from this current structure, and we might likely be at the end of the retracement phase that started at the beginning of the week. And considering the choppy situation we have been witnessing around that 14,220 area, which I made mention earlier is our new demand zone, we might likely see a breakout of the 14,300 to incite another wave of bullish momentum. So our key level, major key level for today that will further give us the confidence to be in a buy position is if price action breaks out of the 14,300. So you want to mark that level out here, and that is what we want to be looking at basically from this current structure. So buying opportunity from this point, a breakout of the 14,300 will be welcoming more opportunities in this market. And the only way we shall be thinking of selling at this point is if price action breaks down that demand zone we identified on the 1 hour time frame. So let's go back into the 1 hour time frame and look at things closely. So we are back at the 1 hour time frame, and like I was saying earlier, the only thing that will make me sell the USTech100 from this current structure is to see price action take out this demand zone. Remember, we've been seeing buy pressure from that area, so we want to see price action takes out all the buy position there, then give us some liquidity to confirm that sellers are gradually gaining momentum, which will definitely reflect on the chart as a retest of structure. It could be the retest of the demand zone at the 14,230 or the 14,235, or in fact retest the trend line which has been supporting this bearish momentum since the beginning of the week to give us a sign that sellers are back into their territory to push price back to the downside. So this is the only way we shall be looking out for selling opportunity from this current structure. So we continue to remain bullish here based on the structure, and we've already identified a key level that will be guiding our bullish momentum going forward. So anywhere above the 14,275 is what we are looking out for to buy from that structure. Then we should be having our stop losses anywhere around that 14,235, which will be dovetailing to between 35 to 40 pips stop loss in this market. So that is how we are going to be looking at the USTech100 for today. If you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. I can see Susie MB, I can see Mayora. How are you doing today, guys? Trust you are doing well, and happy new month to you. All right, so with that being said here, and in the absence of no questions, I want to assume that we are on the same page here. So I will be moving on to the next chart because of the time. Happy 1998, I like that name. Good morning to you, Happy. How are you doing today? I am very sure you are new with us. I think this is the first time I will be seeing a comment from you. Let me know if you are new with us, Happy. All right, so moving on to the next pair. So the next pair we are going to be looking at this morning is the GBPUSD. Now, on the GBPUSD, we have been quite profitable. In fact, this week has been tremendously profitable for us in this community, as we have been having significant profit into our kitty. So on the GBPUSD, for the last 4 days now, we have been buying it actually. And if you remember vividly, at the beginning of the week, we had a key level which was situated at the 1.23400 area, remember? So we had the structure here, and you know how we use our key levels. Our key levels helps us to position ourselves ahead of the new week, and as long as price action remains above that our key level, we want to remain bullish in the market. And if price drops below the key level, of course we want to be looking out for selling opportunities. And if you look at what we have on this chart since the beginning of this week, we have seen situations where buyers had continued to negate all attempt by the sellers to break down the structure. And with this situation we had here, we were looking out for buying opportunities on Monday. And coupled with the structure here was this choppy situation we observed, where price action was initially ranging between the 1.23580 and the 1.23400, which was our key level. And with this simple setup, you know how we do it. We want to see price action either break out of the resistance line to give us an opportunity to buy, or we see a breakdown of the support line to give us an opportunity to sell. And one thing we said here at the beginning of the week, coupled with the structure, was this bullish trend line that we identified here. And as long as price action remains above our trend line, we continue to remain bullish in this market. So you can see how this whole structure was just pointing and screaming at the bullish expectation in this market. And as long as price action remained above the structure, we continue to buy the GBPUSD. So we had our first position when price action broke out of the 1.23580. We also had the second position, had the breakout of the 1.23750. So the first position moved about 80 pips in our favor before the bearish momentum began, and we also had the second position move about 70 pips in our favor before this bearish momentum began again. And during our live session yesterday, we acknowledged the fact that continued buy pressure around the 1.23580 here might likely turn out to be a retest of the structure that was broken earlier a couple of days ago here. And we said the continued buy pressure here will give us more opportunities to buy if price action breaks out of the 1.23750. And I told us all that we should be having our sell stop order anywhere around or below the 1.23580, which dovetailed to about 17 to 20 pips thereabout. And since then, we saw our price action continue to the upside one more time, and since that moment we have about 83 pips running in profit at this particular point in time if you still have an open position on the GBPUSD. And for those who have been part of this profitable trade so far this week, well done to you guys. Congratulations for being on standby to catch this opportunity. So if you still have a buy position at this point in time, the next thing you want to do, you know how we do it here. We want to ensure that we secure the current buy positions by moving all our stop losses on all buy positions here to a certain level to secure the current position. And from the look of things here, I am suggesting that anywhere around or below the 1.234-24300 area seems most appropriate to move all stop losses to at this point. And the reason why that is simply because if the bullish momentum continues here, we want to give room for price action to breathe, as we might likely see some couple of retracement phases or choppy situations that might bring price a little bit to the downside. And if we can have a lot of room for price action to breathe, we can still maintain our position at that point. So let's see how price action plays out from this current structure. And once again, congratulations to you for taking advantage of this opportunity. Well, for those who had missed out on this opportunity, and for those who still want to maximize the potential of the bullish pressure we are seeing here, how do we intend to join the GBPUSD for the New York session today? Well, we already have a simple setup which you can see on your screen right now. And before I talk about that, I want us to acknowledge that that area between the 1.2450 area, which I am highlighting right now on your screen, and the 1.24300 area has been a strong selling niche in this market since the beginning of this week. And because of the situation here, we will consider this area as a supply zone that has been negating the attempt by the buyers to break out of that structure. And if we are going to be adding more position to our existing trade, or probably joining a new position if you had missed out on the previous one, we definitely want to see price action take out all the sell position in this area to give us an important opportunity to join the bullish move to the upside. And this will reflect on the chart as a breakout of the structure, and not until a breakout happens can we be considering buying at this point. And for me personally, this morning when I saw this whole situation, what I did was to place another buy stop order around the 1.245 to capture that move to the upside. And if you have done just that, well done to you. You have done perfectly well. And let's ensure that we have a stop loss on this account by moving our stop losses for this position around the 1.24300 level, which will be dovetailing to about 20 pips, which is not bad at all. And in fact, there's still a chance that price will still come back to retest structure. So we want to be very, very mindful of this whole scenario at this point. Okay, I think I have a network issue right now. If you can see my screen, please let me know. If you can hear my voice, please let me know so that I can confirm that we are on the same page here. Let me know, please. Let me know in the comment section. I'm so sorry for the break in transmission. I had some network issues and some technical itch, which has been resolved. I hope so. And let's continue with where we stopped. Okay, so we were talking about the bullish expectations here. That is for those who had missed out on the bullish expectations since yesterday, and for those who intend to maximize the potential move in this market, that we want to be seeing a breakout of the 1.245, and this will give us a signal that buyers are finally taking out all the sell positions around this area for us to buy the GBPUSD for today, which has actually happened. But if you had missed out on that opportunity, it's okay. I still have an inclination that price will still come back to retest that structure, so we want to be on standby to catch that move as well. So with the breakout of structure we have here, if you had missed out on that one, please, you want to remain patient here. You don't want to jump in front of a moving train right now, so you want to remain patient and wait for a possible retest of structure to happen, where the appearance of buy pressure around this area on our lower time frame will give us an opportunity to join the trend continuation to the upside. So let's keep this in mind. Mark this out on your chart, set an alarm for that zone, and if you like, you want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this instrument. So that is that on the GBPUSD for today. If you have questions, feel free to let me know in the comment section. Okay, I can see comments here. Happy says is new. She's new here. Is it she or he? Okay, you're welcome, Happy. I'm glad to have you around. And one thing I would like to say to newcomers again is that it might look a little bit overwhelming at first, since this is your first time with us, but trust me, be patient, be calm, and with time you will get to understand how this works, and you will be able to use the information you have gathered here to make your independent decision on your account. Okay, just stay patient, stay through this. You might not even make any decision today. Watch through the session, join us tomorrow again 10 a.m. UTC, and trust me that with time you get to understand how this works. So you are welcome once again, Happy. Okay, 1554, I can see you. Thank you very much. Happy new month to you too as well. Jeremy45, how are you doing today? Glad to have you around. So let's move on to the next instrument on our watch list, which is the which one is that? I think is the XAUUSD, right? And on the XAUUSD, we have been doing quite well too on that commodity, as you can see here. And let's run through how the week started for us on the XAUUSD before we go into the details of what our expectation is going to be looking like for today. Now, looking at the XAUUSD here from the beginning of the week, we acknowledge that we had a demand zone, and this demand zone was situated around the 1,940. After we analyzed things from an holistic point of view, we went into the 4 hours time frame and the daily time frame. And after all was said and done, we acknowledge how the 1940 area, which you can see on your screen right here, has been a major determinant for buying pressure in this market. And as you can see, despite the fact that we saw a breakdown of our key level last week, we saw that as soon as price action got into the 1940 level, we saw how buyers jumped in to negate how sellers attempt to break down that structure. Though we had a little breakdown of this level at the beginning of Tuesday's trading session, which later turned out to be a false breakdown. And for those who took advantage of that sell opportunity, if you had moved your stop loss accordingly, just like I always mention here, you would have been taken out in a worst case scenario of break even at that point. So we had this old chopper situation continue above the 1940, and this lasted about 24 to 36 hours, where we saw our price action was trapped within the 1947 and the 1940 to give us an indecisive phase. And this gave us a clue into how participants in the market were still not sure of where price action will go, and the lingering US debt ceiling drama was still in the air. And we also had issues from the possibilities that the Fed might likely increase interest rate based on the positive economic data coming in from the US features last week. So this was quite a lot of attention in the market at that point in time. And you know how we do it from a technical standpoint. Whenever we have this kind of simple flat channel, we want to wait patiently for structures to mature. And what we definitely will be looking out for is either a breakout of the resistant line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And with what we had here on Tuesday, we had our first buy position when price action took our buy stop order above the 1947, and since then we have been buying the XAUUSD in this market. And we also had key levels that we also looked out for more opportunities, and that is the 1955 area here, which, as you can see, in the last in the last 48 to 96 hours, this level has been a very strong demand zone. And since then, price action had continued to climb and find higher highs. And if you still have a buy position running at this particular point in time since Tuesday, you will currently be running with over 200 pips in profit. And if you are taking a position at the breakout of the 1955, as we discussed here yesterday, you will currently be running with about 130 pips in profit. So for those who are taking advantage of these opportunities, well done to you for being on standby to have caught that move. And let's go into the details of what our expectations would be like for today. And mind you, for those who still have a buy position running, you know how we do it here. You want to ensure that you move all your stop losses to secure the current position. We don't want to lose out on what we've had so far, so it's appropriate that we move our stop losses. And from this current structure here and where price action is right now, I will suggest that anywhere below the 1958 and the 1955 area seems most appropriate to place your stop loss at this point. And for the fact that price action is trading above our key level for this week, I told you on Monday that if price action climbs above the key level at the 1960, we begin to become more confident in our buy position, while we look out for more buying opportunity if price action continue to find buy pressure around the 1960. And for the sake of those who are not part of our live session on Monday and you want to see how we got to the point where we identify the 1960 as our key level, let's quickly scale up into the 4 hours time frame. Let's have an holistic view of what is going on in the market and how we got to the point of buying the XAUUSD. So here, right here on the 4 hours time frame, the first thing we acknowledge here was the fact that price action has been bearish. And as you can see, since the beginning of this month, we have witnessed lower highs in this market and lower lows, of course. And to emphasize the strength of the sellers, we had a couple of trend line. Remember, we had the first trend line here, which currently price action is trading at right now, and then we had the second trend line, which is around this area here, from here to here, which price action broke out of at the beginning of the week to give us the signal to buy the XAUUSD. So with the situation we have here, we have been buying. And if we zoom into the current structure and looking at what has been happening here in the last couple of weeks, we saw that during the second week of this month, we saw our price action was caught within a range between the 1,980 and the 1,960, which happens to be our key level for this week. And not until last week we saw the breakdown of that key level, and with the continued buy pressure around this area that we observed at the beginning of the week, we concluded that if price action ever climbs back up right back above the 1,960, we shall feel confident in our buy position while we look out for more opportunities above that structure. And one of the reasons why we said we will feel comfortable in a price breaking above the 1,960 is simply because of this area, which during the third week of the month of May, we saw this area served as a very strong demand zone, and we shall consider that level above that level has a buyer's territory. And if price action comes back above that area and we continue to see buy pressure above that level, then we have no other choice than to look out for buying opportunity above that point. So I wanted to show you how important the 1,960 is. That's why I had to scale up into the 4 hours time frame. So with the information we have here on the 4 hours time frame, let's scale back down into the 1 hour time frame so that we can make a well-informed decision ahead of the New York session today. So right now we are back on the 1 hour time frame. So I would like to do some deleting here so that we have a clean chart. So let me see one of the illustrations here that are not necessary. So I just delete them so that we can have a clean chart. Okay. So let me see, will this trend line still work? Hold on a second, please. Okay, I don't think it will. So now, since the beginning of the week, you will see from here that price action has been bullish. And to acknowledge this, we have a higher low here, which we connected, giving us higher low, which is a sign that buyers are gradually gaining momentum. And though we had the breakdown on Tuesday, we had a sharp breakdown on Tuesday, but we can see that immediately price action climbed above that trend line and continued to find higher highs. And again, we also had a breakdown here during the early hours of today, which we still need to be very, very careful that this might turn out to be a false breakdown actually, but we need this candle to close, this 1 hour candle running right now, which is about 3 minutes left for it to exhaust, to now give us an insight into the real situation of what is going on here. So if this candle closes above the trend line comfortably in such a way that the candle looks more bullish to me, then I want to look out for more opportunities to buy above the structure. And if it so happens that price action still drops back into the 1,960 something like this, we don't want to panic, as this might likely be a retest of structure that is likely going to incite another wave of bullish momentum to the upside. So what we are going to be doing today is to continue to use this trend line as our yardstick to guide trading activity, which means that as long as price action remains above that trend line and above the 1,960, we want to continue to look out for structures, patterns that will be supporting a bullish trend continuation to the upside. And one other thing here is that if price action continues to the upside in such a way that it breaks out of the 1,970, remember this level had been a strong selling niche since the beginning of this week. So we want to see price action take out that sell positions there to give us another opportunity to add more position to our existing trade. Please remember, the bullish trend line here is our key level. As long as price action remains above this trend line, mark this out on your chart, 1 hour time frame. We will feel comfortable in our buy position and look out for more opportunities to buy. Now, in as much as we are looking out for buy opportunity in this market, we want to also consider the potentials that the sellers have too as well. And as you can see, since the beginning of the week, we've had a couple of breakdowns of our bullish trend line. We had the first one here on Tuesday, and we had the second one during the early hours of today, which is a clear sign that sellers are actually struggling to take over the market from the buyers. And now, from the situation of things, it would be reasonable for us to also put into consideration what we want to look out for on this chart that will make us feel bearish in this market. And for me personally, what I want to look out for here to sell the XAUUSD today is to see price action drop back below the 1,960. But I doubt that if that will happen. And the reason why I doubt if it will happen is simply because of this area here between the 1,960 and the 1,955 level, which has been a strong demand zone in the last couple of days. And only if price action takes out all the buy positions within the zone will I start considering selling the XAUUSD at that point. So I want to see a takeout of all the sell of the buy positions here, and probably a retest of structure on my lower time frame to confirm an opportunity to sell. And if that happens, mind you, we have a demand zone at the 1,940 at the beginning of the week that we also want to take into consideration too. So if price gets into that area, we want to move all stop losses to secure our sell positions and wait out and see how price action will be reacting to that level to determine what our next line of action will be. A breakdown obviously will be giving us an opportunity to sell, while buy pressure above this area will be giving us an opportunity to buy. And lo and behold, we already have a close of this candle. So this candle has closed bullish at this point. I'm looking forward to more opportunities to buy this, and there is a high chance that we could have a breakout of this key level to maximize the potential of this bullish momentum. So let's be on standby to catch these opportunities. So that is that on the XAUUSD for today. If you have any questions, feel free to let me know in the comment section. I'm already out of time, so I'll quickly take on the USDJPY and then we close for today. Let's run through the USDJPY. What are we seeing on the USDJPY so far? So good. Okay, so right here on the USDJPY, and look at what we have here. Since the beginning of the week, we have been selling this pair actually. And one thing we saw before the start of the week is I would like to show you that one quickly, as this will give us an idea and why we're actually selling the USDJPY at the beginning of the week. So let's scale up a little bit into the 4 hours time frame and let's look at things from an holistic point of view. Now, the first thing we saw here on the 4 hours time frame at the beginning of the week was the fact that price action has been bullish in this market. And to further emphasize the bullish momentum here, we connected a series of higher highs and higher lows, which gave us this beautiful ascending channel you see on your screen. And this ascending channel has been helping us to guide our bullish momentum ever since the last month started. And one interesting thing happened last week. We saw here, let me zoom in so that you can see things more clearly. So we saw here last week that as soon as price action tested a new high at the 140.750, that was last week's trading session, we begin to see selling pressure resume from that area. And one other thing that made that area more interesting is the fact that it shares a confluence with the resistant line of that ascending channel. And you know, when we have ascending channel, we normally see selling pressure at the resistant line, which has a tendency of pushing price back into the support line of the ascending channel. And look at what we have been seeing here since the beginning of the week: lower lows, lower highs, lower lows, lower highs, and price action is gradually approaching the support line of that ascending channel. And with the situation we have here, we want to see if price action will come here to respect the support line to incite another wave of bullish momentum, hereby maintaining the ascending channel, or we could actually see a breakdown of the support line to incite a sell-off in this market. So these are the things we are going to be looking at on this one. And during our live session yesterday, we acknowledged two structures here. That is the 140.00 level and the 139.700 area. And one thing we said here yesterday is that as long as price action remain below the structures, we continue to feel bearish in this market. And the only way we are going to be buying here is for price action to break out of the 140.00 area to incite another wave to the upside. And in the last 24 hours, we are yet to see price action break out of the 140.00 area. So at this point, things are still looking very bearish in this market. So we continue to hold on to a bullish bias at this point in time. But let me let you know that I actually had some buy positions this morning, hoping that price action will continue to the upside. And this is why I did that. Let me show you what happened on the 1 hour time frame here. So on the 1 hour time frame, which we are in right now, I had a sell position here yesterday, and I hope you did too as well. And price action moved how many pips in our favor? About 76 pips in our favor before this buy pressure began. And I do hope that you moved your stop losses accordingly to lock in some profit. And if you had done that, you would have been taken out in a small profit, or at a worst case scenario, break even at this point. Now, what I saw here this morning was this sharp candle, this sharp rejection of the zone here. Hold on a second, giving me an hammer candle, which from a technical standpoint is a sign that buyers are gradually gaining momentum at that point. And coupled with that, I also acknowledge the fact that price action has been bearish since the beginning of this week, and that is evident after connecting the series of lower highs here, giving us this bearish trend line that you can see on your screen. And one thing I said here this morning when I looked at the structure, and considering the fact that price action was trading along that trend line, I decided to place a buy stop above that structure, with the intention that if price breaks out of that trend line, it might be a sign that the trend line may no longer have the capacity to negate any bullish attempt from the structure. So with the buy stop order, I saw how price action moved about I think 25 pips in my favor. I shared this on my public platform that we should all move our stop losses to break even, and as you can see, we have been taken out on that position at break even. So we were neither in a loss nor in profit on that position. And with an engulfing bearish candle bringing price back into the seller's territory, which is right below the bearish trend line, well, I'm of the opinion that we might likely be looking out for more opportunities to sell at this point. And for those who are taking advantage of the sell position at the breakdown of the 139.700, well done to you for being on standby, as you will currently be running with about 20 pips in profit. You might want to move your stop losses to your entry point right now to secure the current sell position, while we wait out and see how price action react in the next couple of hours. And remember that we have a high impact event coming up in about an hour from now. I think that is the ADP employment change coming up in about an hour, and ISM manufacturing PMI coming in about 4 hours from now. So for those who had missed out on the breakdown of the 139.700 just like me, well, we want to see remain patient and wait for structures to mature to give us another opportunity to be part of a trend continuation to the downside. So I would want to see something like a retest of the structure, retest of the trend line, or the 139.700, continued selling pressure on my lower time frame to give me the opportunity to join a bearish move. And if a further breakdown of the 139.400 happens, continued selling pressure below the structure on my lower time frame, will look out for more opportunity. And depending on how price action reacts to the support line of the ascending channel, remember that is the support line of the ascending channel we identified on the 4 hours time frame. Depending on how price action reacts to this level will determine if we are going to be adding more sell position to our existing trade or getting ready to buy at that point. So a breakdown of the support line will definitely give us an opportunity to sell, while continued buy pressure above the support line will welcome buying opportunities in this market. So to make things a little bit more easy for us to capture any potential opportunity around that trend line, we want to identify the support line there, which falls exactly at around the 139.120. So let's label it out for the sake of clarity. So we have the 139.120 level placed right there. So it shares a confluence with that trend line, the support line of the ascending channel. So we shall be waiting to see how price action reacts to that level. So whatever happens here will determine what our next line of action will be for today. So on this note, I would like to call it a day here on the X Trend Speed Live. It has been a wonderful moment with you this morning, and once again, happy new month to everyone in the house, and welcome to my newcomers in the house. And I trust you were able to gain one or two things during the course of the session. Still looking forward to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instrument we have been monitoring so far this week has been doing, and at the same time get ready for the New York session tomorrow. And remember, we have a very, very important major event, that is the NFP, coming up tomorrow. So we want to see how we want to position ourselves ahead of that event. So join me tomorrow again as we come here to review the market structures to decipher what our next line of action will be. So on this note, I wish you best of luck today, and hoping to see you tomorrow same time. And Sajilo, good morning, I see your comment. Gorilla, good morning. I'm so sorry I wouldn't be able to trade the BTC. I saw that very late. I'm sorry about that. We can look at that tomorrow, you know. So tomorrow morning, let me see. You can drop it in the comment section, so I will be treating it tomorrow. All right. Jeremy 45, Kalunga. Thank you very much, Kalunga. All right. I wish you all the best of luck today, and hoping to see you tomorrow. Do have a wonderful evening, everyone. Bye bye.